What's going on, everybody? My name is Obina. Welcome to the channel. This is the Asika Bros channel. On this channel with my brother Chima, we talk about everything business, finance, and wealth building. Thank you guys for tuning in. If this is your first time, if this is not your first time, welcome to the stock series. This series is all about stocks, everything investing, trading. We're going over all of that. We're here to give you guys knowledge that we obtained over these years of trading and investing, and just hoping that you guys can build your wealth too. This video in particular, we're going to be talking about the mindset of an investor. Please don't skip this video. This is one of the most important videos in the series, and I know my brother Chima is probably going to expand on this too, but the mindset of the investor is extremely important and crucial for you to be successful in your wealth building journey. Now, to start off, I want to say this is the mindset of the investor, not a trader. So let's talk about the difference between investing and trading. So when you're investing in a stock, you're holding it and you're hoping that it grows and continues to grow in value. When you're trading a stock, you're buying here and you're selling there. You're in for a certain window of time. While when you invest, you are in for a certain window of time, but that window of time may be much longer, months, years, 10 years, 5 years. This may sound like a long time to you guys, but trust me, the most successful and the richest of people were able to hold their wealth for a little bit of time. And that is one of the most crucial parts of becoming a good investor, is being able to have the ability to buy a stock and what? Do nothing. That's where a lot of people fail, is that they don't know how to do nothing, and that all goes back to the mindset. So let's take some steps back. We've been going a little bit too fast. I'm sorry, I talk fast. So first, let's understand your goals. What are your goals? If you don't understand your goals, it's going to make investing very, very hard. Are you trying to make some quick gains, which I don't advise you guys to if you're starting off? Like, what is your goal? Are you trying to return 5%? Are you trying to return 10%? Are you trying to outpace the market? What are you trying to do? Like, you can't just be in here. If you're just in here just to be in here, just to be in with the group, with the mob, with everybody who's investing, it's not going to work out as good as you think it's going to work out. So really understanding what are your goals. I cannot tell you your goals. Only you can tell you your goals. Please talk to yourself and understand what those goals are. Now, I have my iPad here just to make sure I'm giving you guys the best content out there. Be realistic with your goals. Please don't tell me you're trying to turn $10 to 100K. Don't tell me you're trying to turn 100 into 20K. You don't even know what you're doing. How are you going to do that? Be realistic with your goals. Set your expectations very realistically. I know you guys probably on Instagram, Twitter, on all these social medias, and you're seeing people going rampage with their returns, showing you the best of the best. They're not showing you the worst of the worst, but they're showing you the best of the best. Zone all that out, take it with a grain of salt, understand your goals and what you are trying to do. Be realistic. Now, moving on. Be patient. Please, please, please. Investing is a patient game. The most patient people win time over time. You can look at the most successful investors. Please go read about Warren Buffett. We have the new generation Cathie Woods. We have Social Capital. Please go test out, please go research all of these different people and organizations. ARK Invest, which is run by Cathie Woods. Patience is the game. Sometimes these people invest into stocks for 5-10 years. Can you imagine what would have happened if you had invested in Apple 10 years ago? Tesla 10 years ago, 5 years ago? That's a lot of money. 800%, 1,000%, 5,000%. The returns are ridiculous over time. The growth is exponential. So please, please, please be patient. Patience is the thing that really takes out a lot of investors. I'm not gonna lie. That's it right there. Patience. They don't got patience. They want bread here and it's there tomorrow. Just because you see some experience, you may see me or my brother Chima showing you some gains or something that it's a lot of money, but this is years of blood, sweat, and tears. This is not just a day in, day out. We took us a lot of time to learn this information. A lot of the stocks, which we're going to show you, we've been invested in quite some time. And that little bit of money we invested a little bit a while ago has taken us so far in certain stocks. And we're going to open up, I'm going to show you guys some of that just so you guys can win too. All right, so we talked about understanding your goals, we talked about being realistic, and we talked about being patient. And number 4, what I'm going to talk about is be willing to learn. This is where a lot of people mess up too. People tend to get the initial, investing knowledge, to get all the basics, and then they just kind of stop and then just kind of invest at will. You want to be sharp. Never stop learning. If you stop learning, you are going to be behind. You want to be sharp. You may want to make a new investment in something, but you may have not found out the information about it until it's too late. You may have just found out about Tesla. Tesla's not too late, but I'm just saying, a lot of things you may find out too late. So please don't find out too late. Continue to learn. Learning is the most important part, or one of the most important parts. I've been saying all these important because they're all important. Learning is an important part of investing. Don't stop learning, as it will cripple your growth. And with learning also comes with learning from yourself, learning from your mistakes. If you made a bad investment, if you was trying to be Mr. and Mrs. Quick Hands, and you bought something and you sold, and then 3 weeks later you see it jumped, be content with your mistakes. You have to understand what you did wrong and what you can do better. If you bought something and it tanked and you just couldn't bear to see your account at those levels and you sold it and you just lost your money, well, embrace that mistake. Go back to the drawing board. Really be strategic. What did I do wrong? What can I do better? Ask yourself these questions. These are important questions. So embrace your mistakes and keep learning. The next point I want to make is, what type of investor are you? That's really going to depend on who you are. What's your background knowledge? What are you interested in? What areas do you see as being the best place for you to spend your time and resources in investing and researching? You have to understand, what type of investor are you? Me, I have a background in electrical and computer engineering. Also work in tech. I have that type of background, so technology for me just works very easy. Now, if you don't have a background in these things, that is not to say that you should not invest in them. You definitely should, but you have to understand enough to make sure you are making the right investment for you. So you have to understand, what type of investor are you? What is your goal? You have a 5-year goal, you have a 1-year goal, you have a 3-year goal. Please, please, please. All of this is investing is very personalized. So just make sure what you're doing is right for you. What someone else is doing may work for you. It may not be right for you. They may just have a different level of knowledge. Invest in things you can understand. If you don't understand it, please, 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 you're wasting your time. You could be in for the worst fall in the stock price that you have ever seen. Please stick to things that you can understand. If you can't understand, research them. Watch our videos, watch other people's videos, look at articles. Please understand the type of investor you are and make sure everything makes sense to you. Now, this may be a little bit more advanced, but the mindset of the investor also goes into understanding what to do when things go wrong and how to limit emotional reactions. So this is the thing that kills most investors, is they react off of emotion. Things is dropping, let me get out. At a store, if the price drops, what you do? You buy. That's a sale. You just got a sale and you're getting out of a company that you believe in, knowing that it's probably gonna go back up. This all goes into the mindset thing I'm talking about. You have to really understand what to do in those difficult situations and take the emotions out of it. You are here to make money, not to be emotional in the stock market. You're here to provide for you and your family and to just have fun with it too. This is really it's gonna be a learning journey for you. It's just as much as it's a learning journey for me. I'm always learning. I can't stop learning about this. So please, please, please have fun with it. Make sure it's enjoyable. Don't stress too much. If it's overwhelming, please take a step back. Just learn and relax. All right, so that's it for today's topic. We talked about the mindset of an investor. We're definitely going to be talking more about mindset throughout the series, but thank you guys for watching. Again, my name is Obina, one half of the Asika Bros on this channel. With my brother Chima, we make videos on business, finance, and wealth building. Stay tuned for the rest of the stock series. We have a lot of different information we have to share. We're just now getting to the good parts, so stay tuned. Peace.